Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, September 26, 2016. It's 10:22 Eastern Time as I start this video, so the market's been trading for almost an hour now. And what I wanted to do today was update on the cannabis, the marijuana trade ideas. But I'll start out here with the broad market, and I did a pretty comprehensive update before the weekend, so there's a video update. Nothing major has happened since then. But the reason I want to touch on these and really tie into why I'm posting a lot of updates on these cannabis stocks, even though there's only of those only one or two, I think just one official trade idea. However, they're all a lot of money to be made in this sector. What profits I've made recently, I've had a tough time on a lot of the trades on the site that are market based, tied into the broad market, and that's because of that price whippy price action that we've had here with the false breakdown, everything else I mentioned. So here's what I'm trying to get at. I've highlighted for a long time this 2 month trading range here that we had, and we had this what seemed like a legitimate breakdown in both the SPY and the broad and the QQQ and everything else. And the SPY, barring that initial snapback, it remained above that level, but has since, with the FOMC meeting last week, snapped back up in there. And so far, they've faded the FOMC rally, which, as I warned, don't jump on the initial reaction because the initial reaction's often faded. However, bigger picture, and this ties into why I'm going over these cannabis stocks. Again, that's where I'm making the money right now. That's where the momentum is strong, and they're very aggressive trades. I've already beat that drum very loud, and that's one reason I don't have a lot of these as official trade ideas. Plus, they're low price stocks. You have to be very careful with the entry and exits. They're thinly traded, so I'm giving you rough ranges. If I put everyone sell here, everyone buy here, we're all going to move the market. On some of these, they're so small. So I'm just kind of going over levels, not to be vague or obscure. Some of these, like the ACBFF, we had official, targets, and it was taking a lot of volume and still is. And as such, we were able to get out, and you can get in and out of some of these. Again, it all depends on where the volume is and how big a position size is everybody's taking, because when the volume dries up, you can really move the market with order sizes that most of you or I or anybody here would never be able to move on any other stock traded, a small cap, mid cap, large cap stock. All right, so the point being here again, to go back to the broad markets, is we had the sideways trading range, the breakdown, the post FOMC rally or rip, whatever you want to call it. And I did highlight just recently last week, the midpoint of these trading ranges has often acted as support and resistance. So here's the midpoint line, that 217 level, and you can see, numerous reactions. You have really a block here at the top of that trading range where prices traded above, with just a couple brief exceptions, I should say. And you had a period where prices were trading below, and you can see how well the top of the range acted as resistance, the bottom of the range was support. And then I pointed out recently this, recent little wedge type breakout here, and that may come in and was likely to come in as resistance. So, if you're a active trader, very active swing trader, certainly you could have shorted that 217 area with a stop not too far above, and that's what's happened. And if prices were to, or if they get above that level, then there's a good chance once we clear that. And again, these are don't look at the intraday moves. Look at the closing basis and daily closing candlesticks, and really you got to get up into that range. And once you do get up into the range, then there's a good chance you're going to hit the top of the range. And most importantly, this is the bigger picture, that of those two, the midpoint of the range, the bottom and top, but then we had this recent breakdown here. What we're really looking at now is this larger range, and this is what, in my opinion, this is when I'll get really actively engage the market. Once we have a definitive break, obviously an upside break would be bullish, and a downside break would be bearish. I still favor the downside break, but until we get it, it could be more of this back and forth noise, and this is very difficult. Makes swing trading extremely difficult, because at least swing trading, uh, the majority of stocks, typical stocks you think of that are highly correlated to the stock market because they are components of QQQ or the SPY or the mid caps, small caps. When those ETFs are being sold, they're being traded in huge quantities by the institutions, by individuals. And so when they're selling IWM or buying IWM, all the small caps within there are being bought and sold. And this is a sideways trading range. So enough on that. That's really why I'm doing this video on the cannabis stocks, the marijuana stocks, because they have, as I've highlighted recently, virtually no correlation to the stock market. They dance to their own drum beat or march to their own drum beat, and could care less what the broad market's doing. And the momentum is certainly there recently. All right, so that's just a quick overview. And again, until we will break at some point, make an impulsive breakout. Impulsive means it doesn't matter if we just limp through there, let's say intraday, a little breakdown and whip back up, and there's not any. You want to see impulsive selling. Once we break below, continued selling. You would like to see ideally on above average volume like we had here. Like I mentioned, this was in my opinion, a very legitimate breakdown. It just proved to be a whipsaw signal. I guess it occurred too close to the Fed meeting, only 2 weeks, in front of the Fed meeting, and for that reason, I guess if that, I already mentioned that in my video, that would be my one regret is I thought we had enough time in front of the FOMC meeting for the market to actually, pan out, to have that breakdown pan out. But what happened is, I guess market participants didn't want to really sell their longs or add any short exposure before the Fed, and the market just went completely sideways and had that little false breakout, or whip pop up post FOMC, and so far has faded that. So enough on that, and we'll just talk on the Qs real quick. Again, to just sort of dovetail on my comments as to why the cannabis stocks might be the way to go right now, or anything that's not highly correlated to the stock market. Here's the trading range in the Qs. So what have we had so far? That was the 2-month sideways trading range. As I said, the breakdown was about as valid as I've ever seen by all accounts, but yet it still proved to be a false breakdown. And then we had this upside break. As I mentioned, I wasn't buying into that because the SPY, the mid caps, small caps, everything else I covered did not confirm. So you had this is just a whippy market. This is a vicious market to both longs and shorts, bulls and bears, wherever you're at. Obviously, a nice sell signal. To some eyes, that might have been a nice buy signal. And by all accounts, it was a breakout to new highs and it break above the trading range. But again, I always say, don't ever trade any one index or sector ETF without keeping an eye on the entire market, because it's very unlikely to see the QQQs break out and have a sustained breakout and rip on higher following that breakout to above that 2+ month trading range. If the S&P 500 and the mid caps and the Wilshire and everything else is still well below that level, you want to see them all confirm. Otherwise, that increases the risk of a failed breakout. All right, that's a lot of time spent on the broad market, but I want to drive home the point that I go where the opportunities are. And lately you've been hearing a lot about the cannabis stocks. There are times where there's other obscure little sectors like the shippers, and I'm trading those actively, especially the momentum sectors that when you have like the shipping stocks and the metals and miners, or the in this case cannabis stocks. When the momentum traders are in there, they are phenomenal. You will have fewer sectors where you can make such quick profits in short order, but you have to recognize when the music stops, because these stocks fall, the volume dries up, they're harder to exit if you're the left holding the bag. So this, I'm trying to say, is just makes swing trading not as conducive as it might normally be. Now, any day now, this is a long-standing trading range. We will have an upside or downside resolution soon, especially from such a tight trading range. Now, maybe it's not the next major trend of the market, but maybe we do break down below here, take out those recent lows, and maybe move down to one of these other support levels. Who knows? Maybe set up a larger trading range that goes on for the next few months. It just won't remain this tight forever. That I can pretty much assure you. All right, let's dive into the cannabis stocks. And I've got several here. This one, they're not in any particular order. I just have the ones that I have flagged. I have more on my list that go down below, but these are the ones that stand out with the blue flag, so we'll go over these. And this one was mentioned by a member, HolloX, in the trading room. You know, I asked, and I continue to solicit feedback from anybody that you know, comes across any of these cannabis stocks, marijuana related stocks. I'm looking for other trade ideas to add to my list. So this one, you know, my reply to HolloX was that you can see here it doesn't have a lot of trading history. Hasn't been around for a long time. You look to the left of the chart, very thin volume here, but now lately it's taking volume. And HolloX made a point, you know, a fundamental case for this company. And at the time, I said, you know, I'd like to see a little more price history. I've mentioned this momentum overshoot, and you can check that. I put a chart up. If you just use the search function, type in the symbol SGBY in the search bar, it'll bring up this my reply and his HolloX's comments on the company's fundamentals and what they're doing different than some other companies. But this was a trend line. We had this key level here at 2 cents, I should say, 2 pennies a share, and you can see it pretty well defined. We had this momentum of what I call Momo overshoot. When you have a strong price advance heading up to a resistance level, it is not uncommon at all to see an overshoot, and that's exactly what happened there. Overshoots like that, you know, are often, especially these parabolic runs, are often met with, you know, a strong bout of profit taken. So that looks like a inverted V. And I did, at the chart I put up, I mentioned these, you know, put these 2 levels here. You can see they've acted as support in the past. And so far, we hit that first line that I had on that chart to the penny, I mean, in reversed. So this was, you know, a buying up, and this would be, if we happen to come back down, the next buying up. And it shouldn't, if it goes below there, that's not healthy for that stock. But the point is the momentum sector, momentum traders are in these stocks right now. I'm going to put up the PPO. It works better with these stocks. And anyways, that one looks good. If it holds that, you know, if it can hold on to that level, it looks good up to here. But I want to say not my, as far as from a charting perspective, not one of my favorites right now because of the comments I made. Not a lot of trading history to go off of. So that one might trade a little erratic. This one I do like. A lot of these I own. GRNH. This one was mentioned as back here within this pattern as a long entry on a break of both this downtrend line, and better to wait for that 5 cent level, which has clearly been taken out, as you can see. So the stock continues to advance. Doesn't look like much, a move from, you know, from 5 cents up to here, but that's a 14% gain so far roughly on that stock. And you can see everything in place, you know, bullish divergence in place. And the one thing lacking on this one, I'm not seeing a lot of volume. Volume is okay, but it's not, you don't see a big surge on the breakout. However, the momentum's in the sector. The, you know, wind is clearly behind, you know, into the sales on this one, on all these trades. A lot of these marijuana stocks, the momentum players are in there. So you buy these, and you know, all these charts I put up these are all potential target levels. You know, this one I expect reaction at 6 cents. You can see the, you know, the reactions to the right and left, what define this line, this resistance level. And ultimately, you know, I think this one has a good shot in the near term if the, you know, momentum remains in the sector to head up here to about the 7.8 cent share level. That would be an ideal target. Could have some profit taking here, but that would be the next target. And ultimately, you know, if these things continue to move higher, this would be a very key level and at least you know, final near-term target. And you know, some of these have the potential to go a lot more than, you know, up to 11 cents a share. But again, you have to really do your own due diligence. If you plan to tuck these away long term, you might want to look at the company and make sure they have a solid business model. Some of these may, some may not. AMMJ, American Cannabis, very nice chart. You have this long-term downtrend line you can see here. It goes back a couple years to 2014. I had to flip to a 2-day period chart. And so what you had is a false breakout here, and you know, you can see numerous reactions on that trend line, and this looks like the real deal. That one looked like the real deal at the time, it just didn't stick. This one you can see a nice volume down below. See the volume here, and you break out of both that long-term downtrend line. See, this goes left to the left of the chart back to 2014. This chart only goes, well, yeah, that trend line continues back there. This one goes to 2014, but it was a little earlier in the year where that trend line generates off of. And then you have this downtrend line more recently off that reaction high. Nice breakout. You can see this is what I refer to as impulsive price action there. Nice follow through so far. And that one doesn't have any resistance. That's my first target up there, about 1987. Up beyond that, this would be my near-term target. Now I expect a reaction here at this level because you can see there's quite a few reactions over there, some reactions here, reaction there. But ultimately, I think this one, whether it pauses there or not, sometimes if the momentum's strong, you can blast right through these resistance levels. But this would be the 33-cent level with a sell limit order just below would be a ideal target to book, pretty much full profits, especially depending on how the sector looks if it gets there. But as long as the momentum is in these stocks, they can run, become much more overbought than one thinks. CVSI, this one has yet to break out. Nice, well-defined downtrend line. You can see numerous reactions there. And you want to see a breakout. You want to see confirmed volume. Here was a little intraday breakout. You can see that candlestick wick there poking up with that doji. But prices closed back below the trend line. So you want to watch for a breakout of this downtrend line. And then this would be the first target here, without a doubt. That's 3.4 cents. And then you can see all the other lines right here. You can replicate these charts on your own. Best to use a log scaling when you trade these charts because the price moves are so much. You have a stock here ranging from, about a penny a share all the way up to 2.5 cents. So that's or 3 cents a share actually. Very large price differential on this chart. So a log chart is going to show a lot better than this is what a non-log or arithmetic chart looks like. It's a mess. You can't even make heads or tails of it because of the price differentials. So that's why you use log or semi-log scaling. There it is, CVSI. EDXC, not one of my favorites. You see these candlesticks. That's just thinly traded stock with probably wide spreads. But one worth mentioning. It could go, but again, not one of my favorites. But there's a downtrend line I'm watching. It tried to punch up below there, above there, and failed. Not the best definition on that downtrend line either. But this is a pretty key support right here. There's been a few false breaks between. That's why this one probably be hard to trade because it has these choppy, long, candlesticks, very low priced, and yeah, I shouldn't even probably put it on this. I am watching it, but I'd have to see that one taking volume and really going to be interested in that. Here's Cara. This is, as I mentioned, this is more of an established biotech, still small company, it's like a $200 million market cap, but I do like this one. Pain management, and they have one of the drugs that they have in clinical trials is a cannabinoid receptor-based drug. So they use marijuana-based painkiller, and they have a few opioid receptor drugs as well. And just nice looking chart. Everything I've already gone over. This one had that trading range there, which it took out. That sort of basing pattern, if you will, defined by that large gap. Had that one little run above it, fell back below. But this breakout looks like the real deal here. Confirm with volume. We already hit that first target level, and if and when that gets taken out, see the reaction was somewhat muted. We definitely had a reaction. We've had a reaction so far, 1, 2, 3, 4 days trading below that level after we hit it, but it also appears to be flagging. Let's take a look at the 15-minute chart, or maybe on the 60 it shows a little better. See this? You can see the strong advance up here, and then this bullish pennant type pattern. So what would trigger the next buy signal in this one would be a break above here, but most importantly above the recent highs. See, we might pop above that pennant, which could then form into a flag if it went like this. But what you want to look for is a break above there on increased volume, especially a break above that previous reaction high, because that will have taken us above my former first target level. Now my first target was 774, but the actual resistance level was 780. We overshot it by just a little bit on the momentum there. But again, that now becomes the next key level is that previous reaction high, which is at 788. So let's say a break above 788, 790, especially on volume, that should take that stock up to that 888 level, which is really $9 is my actual resistance level, but I'm not going to try to eke every last penny out of that one. CNAB, it's got this ugly candlestick here that distorts this chart, but it looks pretty good. You have a downtrend line here, pretty well defined, breakout and a big move. There's a price alert on KNOP, just triggered. You have a breakout, and we hit that level. There's some resistance up there. Again, we have another downtrend line here. So far, it has broken out. Volume is okay, but not great as of yet. I want to see an increase in volume, but there's your levels. That one can run up to 35.5 cent level, and then ultimately, again, if the momentum stays in the sector, 75. CGRW, Canagro. You can see downtrend line, price compressing, coiling, and a breakout. Very impulsive price action, and again, these moves, you're talking pennies. Well, this one about 17 cents on that breakout, but huge runs, 80% return right there. And this one, you have both a downtrend line, fairly well defined, and you also have this horizontal resistance level. You can see all the reactions if you look, reactions from below here, reactions back here, reaction over there. So this is it really needs to take this level out more so than that downtrend line, which it's already taken out. You want to see it pop above that 72-cent level with conviction. And I would say 95, that 95.7 level looks like that previous reaction high. Set your sell limit order just a little bit above there. It could run all the way up here to that $1 level. $1 is usually a very important price point for a stock. It gets picked up on other scanners, once it gets above that $1 share price. So you can see there that's where CGRW was rejected before. And, if it ultimately takes that out, that would be bullish. But so far, I don't see a lot of volume, a lot of conviction in this one. Just one to watch for a trade up to that level, at which point, if it got there, then you'd want to probably take some profits, tighten up stops, and only wait for a breakout, a solid, convincing breakout above the $1 level before going long again. CBIS, just a beautiful history of these downtrend lines. This one goes off to the left of the chart, but you can see the impulsive rips. I mean, it's just textbook, and this is what I'm talking about, how well these stocks trade to the technicals, because that's, for the most part, what a lot of these companies, these are just startup companies, and technicals matter. I don't want to say more than fundamentals. There are some in here that we've made a good fundamental case for, that I'm trading on both fundamentals and technicals. But in this stock like this, you can just sit here and trade these on the technicals all day long, trade a break of these downtrend lines and catch these rips. And here's your most recent minor downtrend line. You have this uptrend line here as support. And as you can see, these guys are a little whippy. You have to give them room. You see these candlesticks here below. Those are intraday breaks of support. You have a few wicks here that broke above that downtrend line, but the real breakout didn't trigger here. Then you can see the impulsive buying. You can see the big surge on the volume bar there. And that's what you want to see here ideally, is a breakout confirmed by volume, and this one looks clear. You have that previous reaction high right here, right about the 1.75 cent level. Then you have resistance here about 1.9, and then you have this primary downtrend line. We can probably see that on the, no, we'll have to go here, 2-day period. You can see that downtrend line goes back for a few years. And that would be a very important level. If it got there, certainly be resistance on the first tag, but a break above there would be quite bullish for that stock, especially on volume, and could bring the thing all the way over time back up here to about the 4.8 cent level. There's some pretty significant resistance there. So again, how you want to trade these is up to you. If you do want to trade them, if they fit your trading style and risk tolerance, you can go for, tuck some of these away long term. If you believe, in the potential for this sector as more and more states and country legalize marijuana, both medically and recreationally, I think the potential is huge, but there's going to be winners and losers, and that's why I take a shotgun approach, spreading money out among many names instead of trying to bet on just one. This is the one I have most of my money in as far as the sector goes. This is the only official trade idea, pure play on cannabis. This is ACBFF. I've covered this quite a bit recently. Just trades so well to the technicals. We have this. I've already gone over all the history. I just want to point out that it looks really good now. Our first entry was at 55. It was put as a swing trade and a long-term trade. And so we're, stocks trading at above $1 again. It punched above the dollar level, stayed there for a couple days, fell below briefly, but we're back above $1. That's a good sign. I really like to see that fact that so far it's holding that $1 level. And if it can continue, the longer it remains up there, volume is just beautiful on this stock. I mean, huge volume coming into this one lately. And again, I'm tucking this one away as a long-term trade for the time being. And still, the price target on the long-term trade is still to be determined. But I'm probably thinking somewhere, over time, maybe the $3 area. We don't really have any overhead resistance, so it's hard to use technical analysis for a price target. I already did that with these pennant and flag breakouts, and certainly you can see here this is the last flagpole. Here's a bull flag pattern here, and actually I should make that more accurate. This would be your flag right here. Take this, move up to the bull flag. This is the flagpole, this white line from that last entry. There's your flag, and we had a breakout, which we already pretty much hit that, yeah. So we already hit that flag projection, pulled back, and so that one's pretty much played out. But again, if it remains above this $1 level, as long as the volume's there, the momentum is there, we'll let this one ride. My plan is to periodically adjust, ratchet up my stops, and let this one run. And at this point, I've traded it enough swing trades and the long-term position that this thing could go to zero tomorrow, and I've still profited on it by having booked some profits on the swing trades. All right, AERO. This one I mentioned before, it had this potential bearish rising wedge, but I said I wouldn't short these guys. This is a good example why you can just get smoked shorting these low-price stocks like this. So this one from the last tag of the wedge, the crosshairs are to the right just so I don't move that trend line, but I'm catching the point where the last tag and that thing ripped up 88 and 89% and foiled that flag type pattern. But it did hit significant resistance. You can see these reactions back here. We go to a 2-day. Well, you can see it here pretty well. And so you see this is, again, what I call a momentum overshoot. See that long candlestick wick? So it punched up there intraday, but like a magnet. It'd be very rare to see a stock go past such a well-defined, these two previous important reaction highs without even blinking or pausing. So you shot above it, came back in. And again, that will certainly be bullish, and it can take it out. It's had a reaction now. It's pulled back in. So one to watch. I don't know if I'd chase that one here. I'd have to study the chart a little bit more longer term, but it's one on my watch list, so I just went down the line and clicked on it. All right, CBDS, Cannabis Sativa. There's a long-term downtrend line, or a primary downtrend line, I should say, to watch. And we have resistance here. It's hard to really make an objective entry here. There is this uptrend line to watch, maybe a pullback to that uptrend line. It did break above this level here, which was support recently, at 263 area. Next resistance is certainly here, and that would be a key level. And this one, what to watch for on this one would be a break of both that horizontal resistance as well as the downtrend line, especially if they come in together. Extend that downtrend line out a little. Here, I'll do that for you. And you'll see where it'll intersect the horizontal resistance. And these are some of my favorite breakouts, if and when they occur, is intersecting resistance levels. So if you take out the horizontal resistance, some traders might be watching, or you take out the downtrend line, which other traders might be watching, you've then taken out two resistance levels at the same time. I meant to put an arrow tool that one could definitely go from there, but a little work to be done, and it's sort of in what I call no man's land in between support and resistance, so I don't really see an entry there now. CCAN, very thinly traded stock. You can see by these candlesticks, and there's a downtrend line, not super well defined, but you do have a pretty well defined support level here. You can see how it's danced around this 7-cent level here, acting as support with a few brief breakdowns below, and it broke down and traded below it before, and that was acting as resistance from above. It's regained that level, and it's punched above this downtrend line, yet we don't see any volume coming in. Just one to watch. Thinly traded, again, a little more speculative. Keep careful on your position size of trading that one. TRTC, nothing stand out on the chart. There's a little downtrend line it keeps moving through. FULL, this one has a pretty significant level here around 274. You can see that level acting tap, acting as resistance when tested from below. A little intraday spike. If you were quick enough, you could have traded that. That would have been a very nice move intraday, but you would have had to get out that same day. So, the momentum's in the sector. So just watch these levels, all these key levels I'm going over, especially if you see them taken out with impulsive price action, volume coming in, and then these are the potential targets on this one. And the last one, CCAN, this one's just been a monster recently, pointed out down here on a break of this downtrend line, which you can see that. And this is what I'm talking about, guys. Impulsive price action, confirmation on a breakout. You can see the volume coming into this stock recently. Following that breakout, here was a breakout. There's a very impulsive candlestick. That was the first target level I had. It hit that, stopped that day, gapped above it the next day, and just continued to run. Hit that 120 level. I think the last update that I did, the last video update, it was on the way towards that 120 level, powered through there, and it's almost hit. This is my my final, at least at this time, target, that $2 level. It's pulled back, and you can see today it's so far found support at this line I've had here, that 145 level right there. And it's finding support there. If it doesn't hold that support, I think the 120 will do a pretty good job on a back test and would certainly offer the next objective entry right there. Here, you're in what I call no man's land. If you're in this one, great. I'm in this. I'm going to give it a little room. But no man's land means you're between support and resistance, well-defined support and resistance. So that's a minor support level here. And I'd like to see that hold, but if it goes back down to 120, I'll only be concerned if that stock impulsively takes out 120. But if it gets up just below $2, I'll be out. I'll sell all my shares, and that one will probably need to work off, the overbought conditions. And down the road, if it breaks above $2, it might provide another long entry. Okay, this has been Randy Finney with the Right Side of the Chart. I hope you enjoyed it.